Well, good afternoon. Happy Friday, August 27th. Mark Milam here, your mortgage professional with Highland Mortgage, coming to you with this week's interest rate summary and market update. So we're at the end of August. All eyes have been pointing to this date, this particular Friday, for at least the past 60 to 90 days. Everyone waiting for the Jackson Hole Symposium. This is where the Fed was supposed to begin alluding to the fact that they're going to begin tapering their bond purchase program. Now, this is a federal purchase program where the Federal Reserve has been stepping in and purchasing $80 billion per month in treasuries and $40 billion per month in mortgage-backed securities. And that extra demand in the marketplace that the Fed has been supplying has helped to keep interest rates low to spur economic growth. Well, in light of the inflation numbers that we've had all summer long, in light of the fact that the economy seems to be picking up a speed, albeit two steps forward, one step back, a lot of people have been pointing to this day to say this is when the Fed is going to announce how they're going to begin to taper the purchase program and when they're going to begin to do it. Well, the Fed certainly addressed it immediately when they began the symposium at 2 p.m. Eastern Time, simply to say that yes, the Fed is looking at beginning to taper mortgage-backed security purchases or bond purchases by the end of the year. Matter of fact, I'll show you the headline here. This is from CNBC. Federal Reserve Chairman Jerome Powell indicates Friday, that's today, that the central bank is likely to begin tapering before the end of the year. But he goes on to say that rate hikes, in terms of rate hikes, the federal funds rate hike aren't imminent as there's still, quote, much ground to cover before the economy hits full employment. And that sort of a combination answer is exactly what the market needed in terms of stabilization. We really didn't want to see anything roil the market one way or the other. The Fed addressed tapering, they addressed the Fed funds rate, and really did so rather deftly. You can see how the mortgage-backed security market is responding quite favorably today. So if we take a look at the historical look back here on the candlestick chart for the past month, you can see all this week it's been mortgage-backed securities losing a little bit of ground, gaining a little bit of ground, losing a little bit of ground, and then gaining a little bit of ground. And here we are on Friday. Green days are good days where interest rates are improving. Red days are bad days where they're not. So nothing like we saw back earlier in this 30-day window. Much more stable here over the last 2 weeks. And some of that is how the Fed is handling this question about tapering. So as we go into the weekend here, headed towards Labor Day next week, we can rest assured that interest rates are going to stay at relatively competitive levels. We're still seeing interest rates in the mid to high twos for 30-year fix, down in the low twos for the 15-year fix. So, of course, if you haven't taken advantage of this as a refinance client, boy, now's your time. Let's jump in there and take advantage of interest rates while they are still low before the tapering actually begins towards the end of the year. Of course, if you're a purchase client, man, you're just so happy to see this window staying open for you to keep affordability low, even in light of reduced inventory as housing prices escalate. It's great to keep that affordability spectrum in the lower end of the range so you can still get into the house that you're looking for. If I can be of any service to you, please don't hesitate to reach out. Mark.milam@highlandmtg.com, 404-395-1102. Pleased to announce today that we are now approved not only in Maryland but also in North Carolina. So now Highland Mortgage able to lend Maryland, North Carolina, Tennessee, South Carolina, Alabama, Florida, and the state of Georgia. Don't hesitate to reach out. Thanks.